Hey everyone, we are very excited to welcome on stage Imène Rahmouni-Rousseau, Director General of Market Operation at European Central Bank. She will be sharing about the ECB and the European response to COVID-19. Imène, the floor is yours.
Thank you. Hi everyone. The ECB President Christine Lagarde said regarding the corona crisis that extraordinary times require extraordinary action. The ECB has taken very forceful action since the very beginning of the pandemic and has shown its determination to use the full potential of its monetary policy and banking supervision tools while staying true to its mandate in order to fight the impact of the pandemic. I will first highlight why this action was necessary. I will then explain the ECB response, both from a monetary policy and a banking supervision perspective. And then I will say a few words on the common European fiscal response, which is a necessary complement to the ECB actions to reduce the probability of long-lasting damage to the European economy from the health crisis. The actions of the ECB have actually reacted to what is the most severe economic recession in the post-war history. And you see that on that graph. So the green line shows you the scenario for real GDP before the corona. Then you see in the below lines the impact of the corona, which is a big shock to the economies throughout the euro area in three scenarios. A severe scenario, which is the red one, which entails losses of output in 2020 that go up to 12% of GDP. The baseline scenario in blue and the mild scenario in yellow. The baseline scenario, which is the one that we trust more, shows that the recovery after the initial hit, which in our opinion is of 8.7% of GDP in 2020, will be a recovery that will be slow and will not lead the economy to regain its level of growth of before the pandemics in 2022. This hit to the economy is accompanied by a decrease in inflation expectations. And the ECB, being the central bank of the euro area, has an inflation mandate which has to be below but close to 2%. That means inflation has to be not too high, but also not too low. And the projections that we made in June after the corona crisis show that at a 2-year horizon, the inflation rate will be only 1.3%. This is the lowest projection for inflation that we have never published in 20 years. And this has prompted the ECB to take very bold and early action. The second reason why we needed to act fast was that we wanted to avoid that the health crisis transforms into a financial crisis like we had in 2007 and 2008. And in this graph, you see an indicator of systemic stress in the system, which in March 2020 was increasing in a very dangerous way. But thanks to the measures we have taken, we have broken this vicious circle, and the level of stress in the system has gone back to levels that are not as low as before corona, but at very reasonable levels. Going now into details about what has been the ECB response to COVID-19, it was timely, targeted, and temporary. And the ECB acts in two domains: monetary policy, because it's a central bank, but also banking supervision, because it is the common supervisor for the euro area. And what I wanted to highlight on this on this slide is that even though our instruments that we use go through the financial markets, go through the banks, the objective is really to help the real economy and to get to households and corporations. The set of measures that have been taken will ensure that firms and households have access to credit. They would also help the banks to provide vital funding to the economy. They will also, through the amount of liquidity that we provide in financial market and in banks, they will help the economy to absorb the shock of COVID-19. And I will provide a few examples of these actions to make it a bit more concrete. On the monetary policy side, the two main instruments that we have used in our response are asset purchases and long-term loans to the banks. On asset purchases, we have launched a special pandemic emergency purchase program of an unprecedented amount of 1,350 billion euros, and this is 10% of euro area GDP. Thanks to this program, which is a temporary program which will run until mid-2021, the financial conditions that you see reflected in the graph on the left, the financial conditions that had tightened, so here you see the 10-year yield of sovereigns compared to the risk-free rate, after the announcement of our special purchase program, have reduced to levels that are, here again, not the ones prevailing before Corona, but which are reasonable and comparable to the levels of early 2019. The second instrument is loans to the banks with a long-term horizon of 3 years. This gives banks certainty about their funding, and by having certainty about their funding at very favorable rates, they then are more willing to lend to households and corporations and the real economy in general. So here you see that the operation, the special lending operation that we launched for the pandemics, the TLTRO, has attracted 1,305 billion euros of bids, and this is also 10% of euro area GDP. So combined together, the asset purchases, the long-term lending, that's 20% of euro area GDP. And these lending operations to the banks have ensured that instead of having the banks refusing loans to corporations because of the uncertainty created by the crisis, we had actually the exact opposite. And you see in the graphs on the right that the amount of bank loans to euro area firms have actually increased after the COVID crisis, because banks have provided more lending in order to compensate for the loss of revenues of corporations and households. I also wanted to mention a few measures, and I'll come back to the slide before, on the banking supervision side, because we wanted that the banks really do their share in these difficult times. And therefore, what we have done is that we have temporarily reduced their capital buffer requirements, so that the banks can use part of these buffers in order to lend money to the real economy. At the same time, this encouragement to do their share was also to issue very early a requirement to delay the payment of dividends to the shareholders of the banks up to at least September 2020. So the response on the monetary policy and banking supervision side has been quite forceful, but it has also been accompanied and this is really a breakthrough for the euro area and Europe by a fiscal response, which is a common response of unprecedented magnitude. So part of it has already been agreed. So you see on the left-hand side that 540 billion euros have already been pledged by the European Council in order to fund a number of initiatives on mitigating unemployment risks, lending to companies through the European Investment Bank, and also supporting member states in their health expenditures. But even more important, there's a new instrument that has been proposed as an instrument for the recovery after the health crisis, and that's called NextGeneration EU. And that will consist of the European Commission issuing bonds on financial markets in order to foster solidarity in Europe and fund a common European response to the crisis. And you would be interested to know that part of this common response also has to do with investments in the future, and in particular in green finance and in technology. So concluding on all of this, the combination of the monetary policy response, the banking supervision, and also the fiscal response, which has shown a lot of commitment from the European side and a very common response, will allow Europe to be very well positioned for the recovery of the economy, and to avoid that the losses that were inevitably brought by the pandemics become lasting economic damage. Thank you.